Now, if you're personally a fan of different stocks that pay dividends, but not only that, have a history of paying more and more in dividends over time, then I promise you today's video is going to be right up your alley and you are definitely going to want to stick around for this one. And this is because we're going to be going over a brand new ETF that I just came across as of recently that literally only invests in stocks that have a history of consistently, for years and years and years, increasing their dividends over time. Now, the great thing about ETFs and or stocks that increase their dividends over time is that right off the bat from the start, even if your dividend income from these different names isn't as high as you wish it would be, over time, these different assets can pay you more and more in income year after year, which is going to make your total yearly and total monthly dividend income goals much more obtainable for a lot less invested. So if you want to dig into this dividend growth style ETF with me that's only been trading for a little while, but I promise you the strategy looks very, very sound, well then make sure to drop a like down below, stick around, and let's get right into it. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the new ETF that we're talking about that specifically invests into 30 plus different companies that have a history of increasing their dividends, not for 1 year, not for 10 years, but for 50 years, is ticker symbol KNGS or KINGS, the Dividend Monarchs ETF. Now, when I came across this ETF as of recently, it definitely caught my eye, and that's specifically because for my personal strategy, as a lot of you guys probably know, I've been buying a ton of SCHD over the past several years, and this is simply because SCHD also invests in stocks that historically have offered dividend growth, which has allowed this ETF to pay more and more in dividends over time. Now, the reason dividend growth is so important to me as a 32-year-old investor is that, like I said earlier during the intro, even if I'm not getting paid the most amount of dividend income today or tomorrow, over time, if you invest in different companies and or ETFs that have a history of consistently paying more and more in dividend income, that's going to help you not only outpace inflation, but allow you to live a much, much better lifestyle, hopefully later on. So because you guys know I love dividend growth, it's one of my most important metrics when it comes to my dividend investing objective, I had to look into this one a little bit deeper. But to go back for a second, this ETF says it invests in 30 plus companies that have increased their dividends for over 50 years with the round till S&P Dividend Monarchs ETF KNGS, containing selected stocks from the S&P Composite 1500 Index. Now, in case you're wondering what the S&P Dividend Monarchs Index is, this index says right here, the S&P Dividend Monarch Index is designed to measure the performance of companies within the S&P Composite 1500 that have followed a policy of consistently increasing dividends every year for at least 50 years. Now, what's cool about different ETFs that track very specific rules like this one is that because the rules are so strict, in this case being 50 years with dividend increases every single year, there's only so many stocks that are going to match that criteria, because let's say even if a stock has increased their dividends for 20 years or 30 years, still very impressive, but with this ETF specifically, you're getting exposure to a much, much more rigorous screening. Now, the overview for this ETF says Roundhill believes that dividend monarchs have demonstrated resilience in their ability to grow dividends and in turn generate strong returns for shareholders over multiple decades in operating environments. The Roundhill S&P Dividend Monarch ETF, or KNGS, seeks to track the performance of the S&P Dividend Monarch Index. KNGS is the first US ETF to offer exposure to the dividend monarchs. It then says why KNGS. It says elite dividend growth. KNGS is the only ETF to invest in dividend monarchs, an elite group of over 30 different companies with 50 plus years of increasing dividends. Blue chip leaders, dividend monarchs are amongst the most well-known established companies in their respective industries. And lastly, defensive qualities. Dividend monarchs offer the potential to participate in upside with smaller drawdowns and lower volatility than the broader markets. Now, so far, this ETF, for a lot of us that are focused on dividends and dividend growth, and even income investing to a certain degree, so far this ETF does seem very promising, but honestly, it wasn't until I went through the top holdings to where I was sort of sold, and I definitely thought that this ETF for sure was worth looking into. And of course, let me know what you guys think down below about the top holdings, but some of the names being Black Hills Corporation, we have ticker symbol FRT, we have KVUE, we have SON, we have Hormel Foods, we have Kimberly-Clark. There's tons of different names that are very familiar in here. We have PepsiCo, Johnson & Johnson, Target Corporation, AbbVie. I mean, there's so many blue chip names in this ETF, at least so far looking through, that again, if you are a dividend investor, especially a long-term investor, it almost feels like why not gain some exposure into this specific group of stocks. Now, also interestingly enough, it shows right here that dividend index comparison, and this is showing required number of years of increasing or maintaining dividends, and it shows that the S&P US Dividend Growers Index is around 1.74%, the S&P Dividend Aristocrat Index is about 2.3%, and the S&P Dividend Monarchs Index is 2.8%. So not only are you getting access and exposure to different names that have consistently increased their dividends for 50 plus years, but also you're getting a pretty nice decent yield right off the bat. Which brings me into more facts about ticker symbol KNGS. As of right now, the distribution rate is around 2.86%, which is not bad whatsoever, especially because with names like we broke down in the top holdings, you probably are going to have some upside exposure on top of the dividend and the dividend growth as well. Now, the expense ratio for this one is pricey, I will say, at 0.35% expense ratio, which is probably the only thing so far about this ETF that I'm not really a fan of. I think because this ETF doesn't seem all that hard to manage, I don't necessarily think the expense ratio should be that high, but I guess it is what it is. Now, the AUM is 3.14 million, so this ETF is very, very small, relatively speaking, but keep in mind it only launched around a year ago. Now, like I was saying, for a passively managed management style ETF, again, the expense ratio is pretty pricey, but to be real, it would be sort of hard to build out, I guess, on your own, a dividend monarch portfolio, although it's definitely possible. Now, lastly, before I give you guys my final thoughts about the Round Hill S&P Dividend Monarch ETF and let you know whether or not I want to buy some shares of it, lastly, looking at the performance of this ETF on the max time frame, and again, this is since around end of October last year, the ETF is up around 10% as far as price return, and keep in mind it does pay around a 2.9% yield. So all in all, it really hasn't performed all that bad or all that well, at least during the time frame. But I think that has a lot to do with the names that this ETF is going to invest into. I mean, I personally hold multiple of these different names, even in the top 10, and these names are pretty low beta. They're not necessarily going to move as fast with the market or down as fast with the market. So you are getting some stability and sort of some boring names, which again could be something that some of us investors are looking for. Now, for the first year payouts, and keep in mind there's not that much data to go off of, so we're going to have to see what the future payouts look like, but there really hasn't been any dividend growth, at least as of yet. We have a 23-cent payout that was last December. Then as far as March goes, a 19-cent payout, 20-cent payout back in June, and then in September we have a 20-cent payout. So it's not like this ETF is really paying more and more every single quarter, but it's probably going to shape up and look a lot better over the next year or so. At least that's what I'm assuming. So all in all, the ETF that literally invests into only names that have been paying and increasing dividends for 50 plus years seems like a nice ETF to have some exposure to if, of course, you are a little bit more of a risk-averse investor and want to find some stability for your portfolio with some of the names that we talked about that probably are going to give you some exposure to that. Now, for me personally, because I already have so much exposure into sort of dividend growth names that, let's be real here, are pretty boring. And this is because I currently own almost 2,300 shares of SCHD. I personally don't feel like there's a huge need for my long-term portfolio to add more exposure to different dividend-paying names that have, of course, grown their dividends over time. And that's simply because I already own so much SCHD. But longer term, it is going to be interesting to see how this ETF compares to that of SCHD or other different dividend growth style ETF names like VYM, DGRO, etc. So for that reason, I probably will not be adding any KNGS to my portfolio anytime soon, although it definitely still seems like a quality ETF that I think will probably do pretty well long term. So now that we went over and talked about the Round Hill S&P Dividend Monarch ETF, I lastly want to hear from you guys down below. Is this an ETF that you personally would add to your long-term portfolio? Let us know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.